Officials of the U.S. Central Bank continue to influence market sentiment. At first, many officials of the regional central banks of the U.S. provided hawkish comments which supported the U.S. dollar. Now the U.S. currency is losing value amid the words said by Philip Jefferson, a member of the Federal Reserve Board of Governors. He has hinted that at the next meeting, the regulator will take a pause in the cycle of monetary policy tightening. What's more, news about the U.S. labor market conditions will affect the Fed's decision. In our video review on the InstaForex TV channel, we will find out what events will shape traders' sentiment early next week. Early next week, traders will mainly focus on the signature of the debt ceiling bill, the President Biden, and the ISM Services PMI. Analysts suppose that the indicator advanced in May. Meanwhile, business activity in the manufacturing sector remains in the negative territory. Notably, any positive information from the United States is considered by traders a hint about a possible rise in the key interest rate in June. There are also speculations about further auctions of the Reserve Bank of Australia. On Tuesday, June 6, the central bank will hold a meeting. Before the previous meeting, traders had expected the regulator to keep the key rate unchanged. However, the Reserve Bank of Australia raised the benchmark rate by 25 basis points amid still high inflation. Notably, in the first quarter, inflation reached 7% per annum. Nevertheless, analysts suppose that on Tuesday, the regulator will hardly change the key rate. If the predictions come true, the Australian dollar will decline. On Tuesday, traders will also pay attention to the data from Canada ahead of the Bank of Canada's meeting. Although the indicator may inch down, economic activity will remain strong. Thus, economists suppose that the indicator will show a reading of 56.5 points. It's a very high level compared to other global economies, which continue to report contraction, and such positive news may boost the Canadian dollar even despite the fact the Bank of Canada will hardly raise the benchmark rate, and we will talk about this a bit later. Early on Wednesday, traders will continue opening positions on the Australian dollar. The fact is that the country will issue its GDP report a day after the Reserve Bank of Australia meeting. Economists foresee that in the first quarter, the economic growth slackened. According to the forecast, the economy expanded by 0.3% on a quarterly basis, whereas on a yearly basis, the growth slowed down to 2.4% from a 2.7%. In fact, it's an overall trend. Many economies have lost upward momentum and failed to meet expectations of a recovery. China's trade balance also confirms this trend. The fact is that China is the main supplier of goods and it reflects global consumption. However, forecasts are rather gloomy. Both exports and imports are likely to fall, which proves that it's too early to talk about the economic recovery. Against the backdrop, traders are likely to choose safer assets. Let us return to the key interest rate in Canada, and the central bank is expected to continue monitoring macroeconomic data, which is considerably better than in many other countries. If the United States is planning to take a pause in the cycle of the key rate hike, the Bank of Canada may also do the same. In Canada, inflation is at 4.4% and the economy remains resilient and its outlook is upgraded at every meeting. And how we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to our channel and follow news with us. And see you soon!